It is time for money, power, and politics. The president has started the trade war again. This time, he is targeting Switzerland. Swiss leaders traveled to Washington, D.C., after the president announced a 39% tariff on Swiss goods. This is one of the highest tariffs yet. This means Swiss products like chocolate, watches, and skincare could become much more expensive if no deal is made. The president said the U.S. has a $40 billion trade deficit with Switzerland. He repeated this many times and called it a big problem. The Swiss watch industry went into panic. The U.S. is their biggest market, with more than $5 billion in sales last year. A 39% tariff would almost shut down those sales. Experts said the tariff would be devastating for Swiss brands. On Thursday morning, Zurich woke up to the shock. The president officially placed the 39% tariff on Swiss exports to the US. This is the highest tariff in Europe. Last week, Swiss President Karin Keller-Sutter and Economy Minister Guy Parmelin returned home without a deal. They failed to convince the White House. Switzerland offered a new trade proposal, but it was not enough. The tariffs went into effect, hitting Swiss exports worth more than 65 billion Swiss francs in 2024. Pharmaceuticals, Switzerland's biggest export, were not included in the tariffs for now. But gold was included. Gold prices jumped as markets worried about the impact. Swiss businesses were shocked. Jean-Philippe Cole, deputy director of Swissmem, said there is disbelief and anger. He called the tariffs unfair, irrational, and arbitrary. Big companies like AB and Stettler are already renegotiating contracts with U.S. customers. They are trying to manage the new costs. Economy Suisse, the country's largest business group, warned that more than 10,000 Swiss jobs could be lost. The president said he targeted Switzerland because of its $47 billion trade surplus with the U.S. in 2024. But when services are included, the number drops to $22 billion. Swiss leaders reminded Washington that Switzerland is the sixth largest foreign investor in the U.S. They support 400,000 American jobs. Even so, the tariffs were applied. Tariffs are no reason for companies to invest more in the U.S. These tariffs are not a trigger for growth. Instead, they threaten Switzerland's export-driven economy. And the effects could spread much further. Let's look at the winners and losers. Swiss exporters are hit the hardest. Take Thermoplan, a coffee machine maker that supplies Starbucks around the world. The company made 355 million Swiss francs in sales last year, and almost one-third of those sales came from the U.S. CEO Adrian Steiner said most of their parts are made in Switzerland for quality and reliability. Moving production to Germany, where the U.S. tariff is only 15%, would be costly and difficult. Setting up factories in the U.S. would take at least 2 years, with no guarantee that the rules won't change again. The watch industry, worth 20 billion francs, faces the same struggle. Breitling, which makes nearly a quarter of its sales in the U.S., may raise prices worldwide, especially on luxury models. But at cheaper price levels, they cannot increase prices much. Stockpiling watches in U.S. warehouses helps for a short time, but it is not a real solution. Smaller brands, like Maurice de Mauriac, get about 30% of their sales from the U.S. They are holding off on price increases, hoping that policies will change again. Netzel, a maker of precision machinery, is already losing orders. CEO Renzo David said one U.S. client canceled a shipment, saying they could not pay 39% more. With almost all of its revenue coming from exports, Netzel is now looking at new markets in Mexico and Brazil. So far, there are no clear winners. But some Swiss companies with U.S. operations may adjust more easily. Economy Swiss official Jan Teslander said tariffs are never a good idea. He reminded reporters that it is always the importing country that pays the higher cost. This means American consumers will face higher prices as Swiss companies pass along costs. Professor Matthias Hoffmann at the University of Zurich explained that Europe, including the UK, buys nearly twice as much from Switzerland as the US does. This could push Switzerland closer to the EU, making a trade agreement urgent. Looking at the bigger picture, Trump's tariffs are part of a larger global strategy. They raised the average US tariff rate to 15.2%, up from 13.3%. In 2024, before Trump's re-election, tariffs were only 2.3%. This sharp increase could disrupt world trade. The WTO predicts global trade could fall by 1% this year. Now the question is, can Switzerland negotiate a better deal? President Keller Sutter's team is studying the impact and speaking with the US, but Switzerland's government needs agreement among 5 ministers, which slows down the process. Breitling's CEO pointed out that Trump can decide on the phone in 20 minutes, but Switzerland cannot. The key lesson here is how tariffs really work. A tariff is a tax on imported goods. It is often used to protect local industries or to reduce trade imbalances. Trump's 39% tariff on Switzerland is meant to cut down its $47 billion trade surplus with the US, but tariffs often backfire. They raise prices for consumers in the country that sets the tariffs. In this case, the US and Switzerland, which already has zero tariffs on industrial imports, actually has only a $22 billion surplus with the US once services are included. This shows how complex trade balances really are. Trump's tariffs have shaken Switzerland, and the effects could change global trade. Will Swiss and US businesses adapt? Or will prices rise even higher for consumers? Share your thoughts in the comments. And don't forget to like and subscribe.